Look at Facebook. They have you on
All professional.
all professional. They have you on a countdown. Welcome everyone. I am Tuesday Tate with ATK Realty, Advance the Kingdom Realty, where happy and home meet, brokered by Coldwell, Banker-Kaiser. I have the honor and privilege of being here with my friend, Zach Mayhew of Caliber Home Mortgage.
Thank you.
Correct? I said it right.
Caliber Home Loan.
Home loans.
Almost.
I'm almost there. I've been, we work well together, so
For sure.
I forget, So you are here today, Tuesdays with Tuesday, where relationships rule in real estate. You don't know, do you know my little beat? Tuesdays with Tuesday.
I can pick up what you're putting down.
Tuesdays with Tuesday. Don't you love Zach? I love Zach. So, Zach, tell us a little bit about what Caliber can do for their customers as they are seeking home loans.
Well, Caliber Home Loans, first and foremost, is a mortgage bank. That's all we do is home loans. We don't do any other type of financing. We don't do car loans, student loans, personal loans. It's all based around mortgages and home financing. We do residential financing. We don't do commercial financing. Okay. So that being said, as a mortgage bank, we specialize in all the products that a person's going to need in order to secure a home. We have all of the regular agency products, agency being Fannie Mae, Freddie Mac, which is conventional, FHA, Federal Housing Administration, VA, Veterans Administration, USDA, United States Department of Agriculture. We have renovation loans. We have first-time home buyer loans through IHCDA with down payment assistance. And then we've got some partners for outside products such as bridge loans and things of that nature. So we really do have all the products that a person could use to purchase their residential home.
Excellent. So what sets Caliber apart from everyone else that when I bring my clients in and I say, I want them to work with Zach, I want them to work with Caliber?
Well, there's a couple things that I think are very important when it comes to choosing Caliber, and me specifically. Caliber, number one, has a great reputation in the Indiana and Indianapolis market. So it's going to be an advantage to your borrowers to use Caliber and to use me, because when they have their pre-approval, it's going to be through a lender that the listing agent is going to have familiarity with. And when the listing agent knows that that lender is going to close the loan on time, they've had great experience working with them in the past, it's going to be an advantage for your customers. The other thing that I think is unique about Caliber, specifically in today's age, is that Caliber doesn't sell the servicing to the loan.
Oh, okay.
So once you close with Caliber, you're a Caliber customer as long as you hold that loan, which if you've ever owned a home in the past, you might have experienced as soon as that ink's dry on that closing documentation, the lender sells the servicing off to a different company. You don't know where to send your payment. My customers can always contact me if they have an issue. I can get them directed to who they need to talk to get their issue addressed. And it's a long-term relationship. So it's not
That's
just
good.
Thank you for the business and see you later. We actually want to grow with the client. And that's what we're all about, is the relationship between the client and the lender and the realtor.
Because it is about relationship. As Zach said, many of us who have had homes, we know our mortgage, and we're like, now who am I with now? You're like, okay, you all own my loan now. Who am I paying? So I have that, I'll say, challenge with a client right now. They had to find out they inherited a property. And they have the original loan papers. But since then, the deceased family members, their loan had been sold like 3 times.
Oh, wow.
So they had no clue. So that, absolutely, I totally agree with that. So this, recently I had a client who has moved to Florida, and we are selling his home now. It's being listed 2708 Duane Drive. Please call me if you are ready to buy a unique property on a corner lot. Very few homes in that area have basements, so give me a buzz. And I called Zach because he was having challenges in Florida getting a loan. And you mentioned a bridge loan. What is that?
A bridge loan is a form of home equity line of credit. Caliber doesn't offer home equity lines of credit specifically, but I do have partners that I work with, just as you work with lenders, that help me get my client what they need.
Yeah.
And a bridge loan is a home equity product that helps them secure the financing to put towards the down payment on the new house, before the actual sale of their existing house.
Good.
So it really does, like you would imagine it, based on the name, it actually bridges the sale between the sale of the first home and the purchase of the new home with the home equity from the original house that they're currently living in that hasn't sold. So that's what a bridge loan is. It's a niche product and can be used in certain circumstances in a very high effective way, but a lot of times we can figure out a way to not use a bridge loan. It just really depends on what that customer's individual circumstance is.
Yes.
And that's where having an actual consultation with a loan officer such as myself, who knows the different products, knows the different ways that they can work together, is really going to benefit the client in the long run.
And one thing I do appreciate, there are many things I appreciate about Zach. First of all, he is always dressed to the nines.
Oh, well.
Like me. So anyway, but one of the other things I appreciate is that when I ask Zach a question or I need to connect him with a client, he gets right on it. And I really appreciate that about you. I really do.
Sure.
So if niche, like what is Caliber's niche? Like what's their sweet spot?
Well, I mean, we're a sweet spot for basically anybody who's looking to buy a residential house.
That's simple.
We don't do anything else, so we're very good at what we do. We have the best underwriters in the market that are going to be able to figure out ways to get loans done that other companies may not have the expertise.
What's the purpose of an underwriter?
An underwriter is a person who is basically making sure that the loan characteristics match the guidelines to the program. Okay. So Fannie Mae and Freddie Mac, they have guidelines. FHA has guidelines for their program. VA has guidelines. They all have to be met in order for the federal agency to insure that loan. And what the underwriter does is make sure that the borrower's file has all the necessary attributes that the different agencies require. And so they're really making sure that, all the I's are dotted and the T's are crossed so that insurance can be put on that loan and then it can be sold on the secondary market and the lender has the insurance on it so that if the borrower did for whatever reason go and have to foreclose on the property, the lender would be made whole because they followed the guidelines of the specific programs.
Good.
So that's what an underwriter is.
That was the most simplest way I've ever heard an underwriter's purpose explained.
Yeah, well, they're very detail-oriented people.
How long have you been in the mortgage business?
I've been in new home sales and dealing with mortgages for 20 years.
Awesome.
I've been doing mortgages exclusively for the last 7. So my whole career has been spent in and around buying and selling houses. Now I'm in the financing phase of it. And I've really gotten to see it from all different sides, so I have an appreciation for what you do, a great appreciation for what my realtor partners are out there doing, helping our customers find the house that they fall in love with and make sure that they get them the best deal possible. And I've got an idea of what happens behind the scenes from the financing end. So I use all my experiences and try to help my customer with all those years of accrued knowledge that I've had in the real estate and financing industries. Yeah.
So if there was something you would tell, well, I would say, I want to ask 2 questions. The person preparing to own a home, they're thinking about it.
Sure.
What would your advice be for them in the preparation of, as well as, just kind of where we are in the economy? They're listening to things. Yeah. They need to listen to us. Don't be scared. You can do this, okay?
Right,
the water is warm. You can come on in.
Absolutely.
So one for them. And then for the person who may be ready to transition out of their home in preparation to buy the next, to upsize, downsize, things like that. What are some advice you would give them?
Sure. Well, I'll start with what I would do for a person who's just starting to get into thinking about purchasing a home. And essentially, when you're looking at qualifying for a home, you're looking at 3 major aspects. It's like a 3-legged stool. And the stool doesn't stay put unless you have all 3 aspects, all 3 legs working. First leg would be your credit. A lot of times people think they need to have 700 credit in order to qualify for a house. That's not the case. You need, for different programs, you need a 580 or above. But typically speaking, when there's 580 credit scores, there's some issues that have gone on in the past that we need to address to make sure that
That's fair.
they can move forward. But we want to look at the credit, and a very key thing in your credit is not to have any late payments. Late payments really do a number on your score, and they don't do it in the positive direction. They really hurt your score, and the only thing, unfortunately, that heals that is time.
Wow.
We can pay down credit cards. We can pay off cards that have gone into default, but what we can't do is overcome lates. So if you're looking to buy a house, make sure that you're current on your payments that you have outstanding now to your credit cards. You don't really want store cards. I know Victoria's Secret's great, and Best Buy is great,
Kohl's and all that,
and Kohl's. But what you really want
is
a
Walmart card now.
What you really want though is the Visa, American Express, MasterCard. Those are the ones you want. You want to avoid store cards. Store cards don't help your credit. And then you want to have 3 to 5 revolving trade lines. And you want to keep your usage of those trade lines under 10% of their available balance. Sometimes people say 30, but it's really 10 is where you get the benefit. 30 is where it stops hurting you. 10 is where you actually get the help. So if you have a $1,000 limit, you never want a month to go by where you owe them more than $100.
Wow. Okay.
That's going to help your score improve. I've always used the 30. And that's not going to hurt you. But if you want to be helped, you'll keep it under 10 or pay it off entirely. The next aspect that we're going to look at is your employment and income. A lot of times people think that they have to be in the same job for 2 years in order to qualify for a house. That's not the case. You have to have been employed in your life for 2 years. And if you have gaps in your employment, you need to have some form of explanation. It can't just be like, hey, I just decided to sit out on the sidelines for a couple of years and travel in the RV. That's not going to cut it. You have to actually have a reason behind taking time off in large segments, more than 3 to 4 months. But what we're looking for is consistent income. Typically speaking, we want to see it in a similar line of work. It doesn't have to be. You can switch to different lines of work, but we want to see what your recent pay has been like. And we can deal with self-employed borrowers, but they have to have been employed in the same self-employed position or ownership for at least 2 years.
Are we in the 3 legs? Is that the 3 legs?
No, we're not quite there.
Not there. We
have one more leg to go, and that's your assets.
Okay.
Your assets are your checking, savings account. 401k can be used towards the purchase of a home. You can use gift funds from a relative. Those are all the assets that you have to go towards the purchase. Those 3 components, your credit, your employment and income, and your assets, those are going to determine which program best fits you.
Okay.
So if you're wanting to buy a house, the best way to go about it is to contact me and actually have a consultation for free. It doesn't cost you anything. And we can put together a plan for you. And if you're ready to buy now, that's great too. I can let you know that, and we can talk about the different programs that you're currently qualified for. So, did you have a question on?
I did.
Self-employed?
I'm not sure if we're at our 15 minutes, but you'll be okay if we go a little over, right? Thank you all for staying with us. Self-employed. How do you guys serve the self-employed person? Because, as entrepreneurs, we write off everything.
Sure.
So that bottom line doesn't necessarily look like what we are really, what we're really making. So how do we serve those individuals?
Well, we have a couple different ways to help self-employed borrowers. The first, and the way that we would like to go out initially, is through the agency loans, whether that be conventional, FHA, VA. Those types of loans are always going to have the lowest rates, the best terms, because they're federally insured. And in order to qualify for those loans, we need to look at the 2 years of tax returns and then take an average of those. But like you said, sometimes self-employed borrowers, they do have some write-offs. They want to reduce their tax liability, which is understandable. And for those specific borrowers, we have what's called a bank statement program, where we can look at 12 to 24 months of your personal or business bank statements. And our underwriters can figure out, based on the deposits from the business, how much you're actually making, how much cash flow you have coming in from the business. Then we look at the expense calculation to see how much you have going out in expenses for the business. And based on those 2 criteria, we can determine how much you qualify for. Now, with the bank statement program, that's an in-house program.
Okay.
We don't broker that out. That's a Caliber funded program. But due to the fact that it's strictly Caliber funded, there's going to be a little bit higher down payment requirement than there would be on the conventional or FHA side. So you're going to have to put down 15-20% to make up for the extra added risk that we as the lender carry because there's no insurance on this loan. But we do have a very great solution for self-employed borrowers. If you haven't, if you've written off a lot on your taxes, that's okay. We can look at your bank statements and get you qualified that way.
And what's the credit score that they need on that?
Credit score requirement's going to be 680 and above. Again, more risk to the lender because there's no federal government stamping it with insurance to, if there's a problem with the loan or if it goes into foreclosure. So we ask a little bit more ante from the borrower into the game so that there's less likelihood of them foreclosing on it in the long run.
That makes sense. I really would like to ask you about the difference between, and particularly for a business person, buying the home under my business or that 680, like my DUNS score or my personal credit.
Right. Well, you would need to be the personal guarantor of the loan, and you can purchase investment properties through our SmartVest product in an LLC's name. But still, again, we'd have to have a personal guarantor, and your personal credit would be the credit that would actually be looked at.
That's good. So all of my entrepreneur friends, come back and listen to this.
Sure.
So we know. So I just thank you so much, Zach, for joining us. It's been a quick 15 minutes. We might have gone over a little bit, but I thank you so much. And everyone cannot do a live.
Oh, well. I'd rather do it better than dead.
Yeah. That was good. So thank you for joining us for Tuesdays with Tuesday, where relationships rule in real estate. If you have a home buying need, a home buying interest, investing, buying, building, selling, I would welcome you to give me a call, 317-820-1089 or atkrealty@gmail.com. Contact Zach at
317-523-0923 or Zach, Z-A-C-H Mayhew, M-A-Y-H-E-W @caliberhomeloans.com.
Excellent. So if I'm your agent, then you will absolutely be connected to Zach anyway. So you get 2 for 1. So I thank you for joining us for Tuesdays with Tuesday. I'm not going to I'll just do the dance. There we go. Thank you so much. We will see you next week. You have a great day. God bless you and keep your relationships strong. God bless.